We're back with breaking news on the state of the U.S. economy. Stocks cratering this morning as President Trump says there will be no deal to end this war with Iran without unconditional surrender. That's sending oil prices soaring. Wall Street also rocked by the February's jobs report just in, which shows the U.S. lost 92,000 jobs last month, way off analysts' expectations. Unemployment also ticked up to 4.4%. Let's go right to CNBC senior economics reporter Steve Liesman. Steve, it was already a rough week on Wall Street. What exactly are we seeing from the markets this morning?
Well, the market's not liking, as you well described it, this sort of double punch here. One coming from the oil side, the idea that the president makes this very open-ended in terms of when this might end, and the idea for markets, all it does is increase uncertainty as to how long this price spike is going to last. Does it filter into inflation and other prices out there? Does it bring down consumer confidence and therefore retail spending perhaps with it? That's punch number one. Punch number two, obviously, these jobs numbers. And the context here, which is very important, is that we had this strong January report. And people thought, well, maybe we're out of the woods here on jobs. And then we get really the opposite. And people are thinking about it, well, the best way to do it is just to average the 2 months together. And you come up with zero. You come up with a very anemic job growth or payroll employment right now. And that is a matter of concern because sometimes when you're just being very on the zero line, you can roll over and all of a sudden you're losing jobs before you knew it. The unemployment rate did tick up. It's still relatively low at 4.4%. But if it starts to get above that, that's when you start to get areas of concern, 4.5, 4.6. And we'll see what happens next month. There were some issues. You had some really bad winter weather that might have kept jobs down. The other issues, you did have a strike, a nursing strike took 31,000 off of the payroll. So that'll come back in the next month. Got to wait to see what happens next month.
Again, 92,000 jobs lost in February. The expectations were there'd be somewhere in the realm of 50,000 jobs added. On top of that, Steve, there were also big downward revisions for January and December.
Yeah, we have had zero job growth over the past 6 months if you put those revisions together. And to my mind, when I look at some of these numbers, I perhaps see some impact of these tariffs out there. Manufacturing has now shed near 100,000 jobs over the past 12 months. That could be the tariffs. And why would you say if the purpose of the policy is to bring manufacturing home? Well, at least initially, our manufacturers import a lot of stuff, and then they fabricate it into other things. Well, the cost of that stuff they're importing has gone up, and so at this point we are losing employment there. Leisure and hospitality losing jobs is perhaps worrisome as well. We have heard talk of a decline in foreign visitors, again related to the tariffs, so that could be out there as well. We also have this decline in immigration, so there are fewer people to hire. That is one aspect of it, but this economy has generated zero job growth over 6 months, and this is the worst month of that whole 6-month period.
Steve Liesman, always appreciate your expertise. Thank you so much.